The relationship between interest rates and home prices are usually pretty direct. They are, of course, not the only determinant though. Migration rates, the cost of building new homes, the rate of unemployment also have an impact immediately on prices. But right now, there's a clear break between the major capital cities, Melbourne, Sydney and Hobart, and those that are still growing fast in Perth, Adelaide and Brisbane. The question is what happens next as interest rates keep on rising this year. Carly Chatfield reports.
The property market roared in 2025, marking a standout year for the sector. National prices surged 8.4% in the past 12 months, led by double-digit growth in Brisbane, Adelaide, Perth and Darwin. The surge was fueled by low interest rates after the Reserve Bank delivered 3 rate cuts in 2025. But a burst of unexpected inflation in the December quarter shifted the landscape.
Today's inflation figures represents terrible news for hard-working Australians.
The RBA acted swiftly at its Monetary Policy Board meeting days later, hiking rates for the first time in more than 2 years.
We've updated our assessment and outlook for the economy and concluded that the cash rate was no longer at the right level to get inflation back to target in a reasonable time frame.
The impact of the February rate hike was felt immediately. Erkan Ersan, director at Ray White Erskineville, Glebe, Alexandria and Surrey Hills, says buyer activity shifted quickly.
Yeah, we used to average about 20 to 25 buyers through our inspections. At the moment, that number has rounded down to about 10 to 15.
Auctions are still drawing crowds, but, he says, buyer urgency faded.
I've noticed that the buyers are a little bit more cautious at the moment. So they are still attending the auctions and they are still bidding, but they're a bit more reserved with how much they're paying for property.
Some sellers are now more willing to accept a price before their auction day.
I've also picked up that a lot of owners are actually selling before auction when they recognise they've got a standout buyer.
On the flip side, some prospective home buyers are still finding it tough to secure a property. Jo Yates is in the market to buy a property to renovate with her sister. She also currently holds mortgages for her primary residence and an investment property. Jo has been dealt a double blow: increased repayments on her existing mortgages and tougher conditions for her next purchase.
So when the rates went up in February, pretty much all of my mortgages have now gone up. So my principal place of residence has increased, and as has my investment property. And then what that also means is that when we're looking for a property to renovate, we're going to struggle to buy something.
REA Group senior economist Angus says it's still early days since the rate hike, but he expects the impact to flow through to home price growth in the months ahead.
It's probably a bit too soon to have seen a big effect from rate hikes. We'd expect that higher rates are going to slow the pace of price growth for the simple reason that, when rates go up, borrowing capacities come down, and so people just have less that they can spend.
The rate hike has forced some buyers to shift their strategy, searching interstate to secure a property.
So we're now looking to buy a property together in Melbourne just because the costs on the Sunshine Coast, where we were looking to buy originally, have increased so much over the last 4 months that we've now been priced out of that area with the mortgage that we can get.
Surging prices and the rate hike not only compelled the sisters to reconsider where to buy, but also what kind of property they can afford.
We're now going to be looking for a small property, potentially a townhouse or an apartment.
Mortgage holders are also feeling the squeeze from the rate rise, with homeowners in Sydney, Brisbane and Perth, the most expensive cities, copping the biggest increase in monthly repayments. For Jo, her mortgage repayments have surpassed the rental income from her investment property.
It upsets me that I have to put the rent up on my tenants when I know that they've got a new baby and they would struggle to go and get somewhere else, but I'm going to struggle to keep repaying that mortgage as well.
She even sought a broker to help her handle the rising mortgage repayments.
I have spoken to a broker last week, and we are looking at different ways to restructure everything that I own and that I'm going to own so that I can hopefully reduce those repayments.
Investor lending continued to climb in 2025, with investor loans jumping to 40% of all loans in the December quarter.
We've seen a big ramp in investor activity in the past couple of years, and what that means is that as a share of buyers, investors are very high.
Even with rate pressure mounting, investor activity remains resilient.
In fact, since the rate rise, I've seen some more investors coming into the market. I guess they're hoping that there's less owner-occupiers and less competition at our auctions.
So we'll probably see a continued high level of investor activity because that's really being driven by the fact that rental market conditions are just very, very tight at the moment.
Following January's inflation spike, the next rate hike is forecast in May, with money markets pricing in 1 or 2 more increases this year. For some, the prospect of slower property growth this year will come as a relief.
Our expectation is we will continue to see home prices rising this year, though probably not at the pace that we were seeing last year. The fact that we're seeing rate hikes this year will probably chill a bit of demand and slow the pace of price growth.
For others, the possibility of further rate hikes means tightening budgets and lifestyle adjustments.
And I'll potentially have to increase the rent on my tenants as soon as I'm able to. In fact, I probably will have to do that to be able to afford to keep that property. And it will mean that we'll have to reduce spending in my household.
February's rate hike has so far had a modest impact on property activity. But the broader question remains whether the Reserve Bank can successfully tame inflation.